Good morning, ladies and gentlemen. This is Greg Michalowski from FXDD, and this is the Wednesday morning, March 24, 2010, New York opening Forex report. Let me remind everybody that trading Forex is risky and should only be done with risk capital that will not change your lifestyle. Traders could lose all their risk capital trading Forex. FXD does not guarantee any recommendations made within its commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXD does not guarantee the accuracy of the information. Despite the fact that they had some better data out of the PMI here this morning in the Eurozone. Eurozone PMI rose to 53.7 from with expectations of 52. It's up from 51.8. The manufacturing index also rose to 56.3 from 54.2 last month and 54 expectations. Industrial orders, however, were weaker the month-on-month, minus 2% versus expectations of plus 1.8. And the big news was that Fitch downgraded Portugal credit rating. Fitch downgraded Portugal credit rating to A minus with a negative outlook. So that weighed on the euro. In addition, the EU seems to be in agreement that Greece should get aid from the IMF. And this is putting into question the whole role of the economic union as far as a unit, and this has caused the euro to come under pressure as well. So we saw most of the action here is in the euro. We also saw the euro Swiss move to new lows, but that has also rebounded. Overall, the dollar has been the strong currency. The flight to quality dollar yen is even up rather strongly, breaking out of its range. So let's take a look at the euro versus US dollar on a daily chart. We broke through this 61.8% retracement level at 134.82. That's the level we've been looking at as a key level here for the euro versus US dollar, and we broke through that level and then moved on to the lower trading near the lows as we speak. Let's go to the hourly chart. We'll take a look at where we stand in regard to from an hourly basis, and you can see this trend has been really working over the last 4 or 5 days here. The market broke through the 100-hour moving average and paused at the 200, and then started to move through that, went through the 50% retracement of the went through other key levels along the way. The last level was this 134.82 level. You can see how the market paused at that area over the last few days. Had a little break below it on this day, but yesterday had a nice little pause at that level, and today we broke through that level, and it was just kind of a straight way to the downside. We had the other additional support at 134.50, and that was also broken. We came back up, corrected to that level, and currently trading all the way down at 133.43. Going back to that daily chart, we do have support down at this 130.33 area. That corresponds to this high right here. Below that is 132.45 for the euro versus US dollar. That corresponds with this low right here. But really not much in the way of support. I guess you can put a line around this area as well off of these lows. Comes in around 130.110, but a lot of people are projecting a 128-ish type of range, or at least target for the euro dollar in the near term. Let's take a look at the 5-minute chart, see if we're getting any clues from that, because the hourly chart, we really don't. On the upside, we have this resistance at 50, currently trading at 90 pips away. So let's go to the 5-minute chart, and we can see here that the market's just using this 100 as the resistance. We had one little correction here that took the market right up to the 100-bar moving average, boom, right to the downside. So the 100-bar moving average currently comes in at 134.15. We'll be watching that level on the top side. We can also I always like to put a Fibonacci from today's, when you especially have a trend type day from the high to the low, put it just for the day, and look for other areas, and that 38.2 comes in 134.05. So we're not getting really anything different from that perspective in relation to what the upside resistance might be. We can also another thing that you can do is put a line up there, 133.91, the old high right there. Let's take a look at the sterling versus US dollar. This broke through the little trend line here of this little wedge form or bullish flag here. and that you can see that in the hourly chart as well, connecting these lows here that we had in the chart. The market's broken through. Now we do have support against the low from on Monday that came in at the 149.30 level, and the market went down toward that level and corrected up. So the sterling, although down on the day, is holding its support level from earlier in the week, and that is causing a little bit of a correction here in the pound versus sterling. Taking a look at the 5-minute chart, you can see how the market also fell using the 100-bar moving average, but instead of the 100-bar using moving average, it went up to the 200-bar moving average. It broke through the 100, came up, tested the 200, failed, and then is now using this 200-bar as resistance. That level comes in at 149.81. We're going to be watching that level on the top side here this morning. So 149.81 is the resistance level. We know the downside is around the 149.30 level for that currency pair. So look for sellers against this level with the stops above. If we go to above, then look for moves up toward the 200-bar at 150.05 level currently. The dollar Swiss, I mentioned that it also benefited to the upside here. You can see how the market had fallen below the 100 and the 200 bar yesterday afternoon. It came up, tested went through the 100, tested the 200, and then broke through at this point right here. What's the significance of this point? Well, we have the two moving averages and the price converging at the same time. That's called Three's Company. That's the way we call it, Three's Company. That means the two prices and the moving average at the same time. Market's going to move one direction or the other, where either it goes to the downside, or in this case, we went flying to the upside here for the dollar versus Swiss. Gain its momentum from the fact that it's in equilibrium here, and it has to get out of equilibrium, and that's exactly what it did. Taking a look at the 5-minute chart, we're given a clue to the upside by through the use of our moving averages here. We had a little break to the downside, failure to extend to the downside here, failure to get to below these lows over here, and the market started to use the 200 as a support level. Boom, off to the upside for that currency pair. So if we were to do a retracement of this pair, go from the low to the high, 38.2% comes in at 106.46. Also puts some horizontal lines at prior lows, including this one here at 106.65. You can see we had a corrective low right there. We had a corrective low right there. So that would be a target, a support level for the dollar versus Swiss. We'll see how that pans out. Moving off to the dollar versus yen, the dollar. This currency pair, there we go, has been contained by or had support against the 100-day moving average, and we've been looking for the market to move up toward the 200-day moving average, and today was the day that we finally broke to the upside, getting above the 72 level, which we've been talking about for quite some time in the currency pair. We put a line in here at the 72. You can see off the hourly chart here how the market broke through 72 straight to the upside. Probably see it better here on the 5-minute chart. Put a line in here. It's the 72 level, and you can see the market just really took off after it broke through that 72 level. It was off to the races for that currency pair. For those people who are watching our analysis over the last few days, that's all we've been talking about as far as the dollar yen, is we have to get through above the 100 and the 200 bar moving average and get above the 72 level, the 79 level, and then it's off to the races. And that's exactly what we did. So I hope other people out there benefited from that advice. Going to the dollar Canada, we're seeing the dollar Canada also move higher, and this is another one of these currency pairs that had the Three's Company scenario here. This is the hourly chart, and the 100 and the 200 hour moving average converged at this level right here, and then the market had to move away. You had to move away to the upside or the downside in this case. Flying to the upside for the dollar versus Canada. So we do have some resistance here in that currency pair up here at the highs for the week. So we'll be looking to target that on the top side for the dollar versus Canada. It still remains a strong currency, but we do have oil prices down here this morning, so we should see some. We may see some further moves to the upside for that currency pair. We'll see how it goes. Market does have a tendency to trend during European session and then consolidate during the New York session. So we'll see if the news today will continue that trend in what we've been, or continue that counter trend that we've seen in recent times in regard to these currency pairs. Taking a look at the retracement level. We have 102.03 as support. That also corresponds with this high more or less here. 101.94 is going to be another level of support for the dollar versus Canada. Aussie versus US dollar has been hit. That too had the threes company trade here with the two moving averages and price converging. The price moved below and started sent to the downside. Do have good support here at the 90.94 level. We also had good resistance up here at the 91.94 level. We were talking about that yesterday in the evening report, and indeed we did find that resistance up at that level for that currency pair. Now we do have the UK budget coming out at 8:30 this morning. That's going to be of strong importance for the market. We also have durable goods out of the U.S. The expectations for the durable goods is for a rise of 0.6 and the ex-transportation rise 0.6. We also have new home sales coming at 10 a.m. 3:15 is that expectations. That's my morning report. Wish everybody good luck in your trading, and we'll talk to you later. Watch those for those corrections. Bye bye.